A conversation with an expert breaking down the impact of the pandemic on the real estate sector, how we see the future unfolding, as well as embracing the new norm. Karibu sana on the show, and thank you for having us in this beautiful building.
Thank you very much, Nancy, and Karibu at Flamingo Towers.
To kick us off in this conversation, give us an overview of the real estate market leading to COVID-19.
Thank you, Nancy. I think pre-COVID, and that is mainly in 2019, real estate sector had started showing signs of full recovery. If you look at the Kenya National Bureau of Statistics numbers, it tells you that the industry grew by 5.3%, upwards of 1.2 from 2018. In 2018, I think we had recorded 4.1%, and that was a good sign. I think we were beginning to see transactions happening in the market in all sectors: office, residential, logistics and warehousing, and it was showing signs of recovery. Of course, stepping into 2020 and COVID-19 happens, and I think now the gains witnessed in 2019 will definitely be affected by the COVID-19.
So where is the market now? In the residential sector? What's your take on the commercial sector, industrial, retail? Could you give us a sneak peek of exactly where you feel we are right now?
Most of the sectors have definitely been affected by this pandemic. And most of the participants in the industry have also been affected, be it developers, be it landlords, be it investors in the industry, be it the banks that participate in the sector. They've all been affected. But if you look at the subsectors, I think it's been mixed activities across the sectors. So if you look at residential, for example, what we've observed is landlords having had to give concessions to tenants, and that's because there's loss of employment. People have not been able to access their places of work, and so as a result, then several landlords have been affected, but also people have had to adjust as a result of loss of job, moving from what I'll consider grade A to grade B and C locations, and that's basically to ensure that they are living within their means. And I think that will continue to happen. So the affordable housing sector discussion is one that we need to continue having within the residential sector. On the office sector, I think people have had to revisit the lease agreements and to renegotiate this lease agreement with a view to either call in force majeure clauses and to basically look at what is it that they can get as concessions. And so landlords have also been forced to give waivers. But also within the office space, companies have had to restructure and to resize. And as a result, either leases get surrendered or companies go for lesser office spaces. And I think then as a result, you expect that there will be more vacancies within the market. And I estimate that it will take another 2 to 3 years, because already pre-COVID, you had a situation of chronic oversupply of office spaces in different market segments. So I think that's going to continue being a challenge in the short run. But I think in the long run, I think businesses will continue to thrive, and so office spaces will be required still. On retail sector, which in my opinion has been the worst hit, footfall has definitely been affected in a big way as a result of cessation of movement and containments and curfews. Then you're not talking the same footfall anymore. In addition to that, with the Ministry of Health guidelines and social distancing, then that means occupancies will be affected. So you can imagine an eatery that will normally be occupied by 100 people at a go. That has changed. You're probably talking 50% of that number. So then that means trading will be affected. And if you think about it, spending power is not the same. And so you can't just adjust cost of products upwards. So then what means is that the person who suffers is a trader, and that has to be borne or shared with the landlord at the end of the day.
How is that going to be shared? Will the landlord now offer me a bigger space at a discounted rate?
Most likely, that's the direction we'll have to take. So basically what will happen is that the rental rates will drop.
In the retail space?
In the retail space. Because, I mean, if I can't trade if I can't trade properly, then I can't afford that space and I'm out of business. So to keep people in business, we have to rethink the rental rates. And I think then that pushes the challenge to the developers to start thinking, how do you put up the same mall at significantly lower cost so that you can rent that space at what is a reasonable price to enable your tenants trade so that the turnover of tenants is kept low.
What about the logistic and industrial parks? Where are we today?
I think because of the movement challenges, the logistics, and I will consider the health sector, I think will continue being attractive, because then with the cessation of movements, you can only move so far in a day with the curfews, and I mean, we don't know how long this pandemic will last. We don't know how different countries will behave when it comes to curfews, containments, and cessation of movements. And so as a result, I think that logistics and distribution centers will continue, it's a market that will continue growing, and there will be increased demand as we go.